Good afternoon, ladies and gentlemen. This is Jules Epstein-Hebert, Director of Membership with Inclusiv. Really pleased to welcome you all back again for a conversation with Amber Kuchar-Bell, Program Manager for the CDFI program, of course, the CDFI Funds Grant Program. Thanks so much for being here, Amber. We also are going to hear from Inclusiv colleagues Monica Copeland, Pablo De Filippi, and of course, Terry Radigan, the Senior Consultant and CDFI expert. We are going to get started in just a moment. We wanted to allow a few more registrants to get logged in, and we'll get the show on the road. Good afternoon, ladies and gentlemen. Once again, welcome to another Inclusiv webinar. This one is going to be covering the 2021 CDFI Financial Assistance and Technical Assistance Grant Round and applications. And of course, it will be done in conversation with the CDFI Fund. My name is Jules Epstein-Hebert, Director of Membership with Inclusiv. Really pleased to have you all. Thank you for joining us. And of course, we want to extend a warm welcome to our guest of honor, Amber Kuchar-Bell, Program Manager with the CDFI program at the CDFI Fund. I'm also joined by my colleagues, Monica Copeland, Pablo De Filippi, and Terry Radigan. Before I turn the microphone over to our tour guide for today's discussion, Terry Radigan, I just wanted to say a few words. First of all, this is going to be a recorded presentation and conversation. We hope that you will be free in your questions. Please use the chat tool or the Q&A tool, or you can also raise your hand if you would like to ask one or any of the panelists directly. We welcome that towards the end of our discussion. And before we get into I also wanted to share, we will be sharing a recording and slide deck along with some other materials and tools with all registrants after the presentation. And we do have a couple quick poll questions for the audience. We just want to get a sense of where all of you are in terms of applying for these resources. So if it's okay with my co-panelists, I'm just going to go ahead and launch the poll. So you all have two questions to answer. The first is, how far into the application are you? We'd love to know where you are in the application process, and also whether you're actually applying, and if so, whether you're a first-time applicant or a repeat applicant. And we are very happy to see that there are a couple folks on the line that are not applying and just curious. We hope that this will provide you with the ammunition and information that you need to apply in the next funding round. Just going to give a few more moments in case a few additional folks would like to vote. I'd like to see 70% voting if possible, but I don't know that we'll get there. Oh, 66%, we went down. Okay, I'm going to close the polling. Thank you for those who answered. And this information is helpful. I just going to close the polling and we'll share the results momentarily. So we are sharing the poll results. It looks like many of you are just getting started. That is quite all right. And that's helpful for us to know. And the vast majority, well, the majority of respondents, about 47%, are repeat applicants, but we have for the FA, but we have a number of folks applying for the first time for both FA and TA and repeat TA applicants. Thank you so much. I'm going to stop the share and turn and stop talking and allow Terry to share some additional information.
Thank you, Jules, and good afternoon, everybody. Before we get to our guest of honor, I'm just going to quickly take a few minutes to run through kind of where we are with all the different opportunities that we've been talking about for the last couple of months. Some of the support that's available from Inclusiv for Inclusiv members, and then we'll get on to the star of our show. So just to recap where we are in relation to all the opportunities, there are a couple of grant opportunities that require CDFI certification that include the rapid response grants, the financial assistance grants, the COVID-19 recovery grants, which have not yet been announced. And for CDFIs and eligible non-CDFI credit unions, they can also apply for technical assistance grants. All of these opportunities that you may have heard about are coming through the CDFI fund itself. There is also the Emergency Capital Investment Program, ECIP, which is a loan program, a secondary capital loan program through the Treasury Department. So what are we talking about today? The RRP grant has already closed. The application deadline is closed. So today's Q&A is specifically about financial assistance and technical assistance grants that are now open for application. As a reminder, the application deadline by March 22nd, which if my calendar is correct, was last month, by March 22nd, you needed to have submitted your SF424 through grants.gov. And the deadline for both FA and TA applications is May 3rd. If you did not submit your SF424 for these programs, for the FA TA program, you will not be able to apply by May 3rd. The SF424 should already be in your AMIS account. So if you successfully submitted, but for whatever reason don't see it in your AMIS account, please submit a service request and let the CDFI fund know. And again, the deadline for the final applications is May 3rd. Please don't wait until the last day to submit your application. We saw from the poll, somebody has already submitted. So somebody is way out ahead of the rest of us. And maybe we should have a webinar just with them to find out what it's like to really be that far ahead of everybody else. And Amber can tell us later if there's a special prize for being the first applicant. I don't know if the CDFI fund does that, but we can ask her. What kind of support is available from Inclusiv for our members? If you are a member of Inclusiv and CDFI certified, you will have already received this a copy of a workbook that looks something like this, that we distributed in advance of the RRP application deadline. Most of the data you would need for your financial data inputs for your FA and TA applications is in this same workbook. This is a workbook, obviously, that was adapted from the CDFI fund's own template. The financial data in this workbook includes all historic 5,300 data that is crosswalked into the CDFI fund's financial data format. You will need to add projections for 2021, 22, and 23 for your application. And there's a few other data points that will be required to complete the financial data input. One of the attachments that we will be sending to all of you who registered is the CDFI fund's own Excel workbook for filling out the financial projections. So if you haven't actually already downloaded it from the CDFI fund site, you can use that workbook. It's useful to use that workbook because one of the things that's important to keep in mind, if you're worried about the projections, not every single line has to be projected for credit unions. There's only a select number of financial lines that need to be projected. If you participate in Inclusiv's free annual recertification, ACR service, you will have noticed in your RRP workbook that we've already provided target market values from our records that we've calculated based on your loan data. If you are not a CDFI member of Inclusiv, but you are interested in getting the workbook, while we won't be able to provide the target market values, we can give you all of the financial data, for the historic years 2017 through what is considered the current year in the application 2020. So we can give you all of that. Just contact Monica, and if you drop her an email, we can send the data that's specific for your credit union. And again, it would, since we wouldn't have done your recertification analysis because you're not a CDFI, we would not have your target market values. That's something you would have to develop. Tomorrow, for those of you that are participating in our annual certification report, where we have analyzed your loan data, we will also be sending you a loan profile. And the profile includes these particular data points. So in the RRP workbook, you would have seen the bottom line, target market values that we had calculated. This lending profile will break that out so you can see, by type of target market, what your number and dollar amount of loans were in 2020. It will also include some other useful things that can help you either in the data inputs or the narrative portion of your FA, TA, or even your ECIP applications if you are applying to ECIP, including loans in persistent poverty counties, opportunity zones, high poverty areas, lending in low and moderate income census tracts, which is again directly applicable to the ECIP, Inclusiv's financial inclusion ratio, broken out by target market, and a diversity lending profile, lending by credit tier. Again, that will be going out tomorrow to participants in the ACR service. One last note, we will not be answering any questions related to ACR or target market modifications today. For those of you participating in the service, your draft ACRs are already prepared. We don't want to inundate people with too much too many attachments and information all at once. So we will be distributing those drafts early next week, and we'll be happy to answer any questions and do any revisions that you may need at that time. But wait, there is still more. I would like to introduce our colleague Monica to talk a little bit about our efforts to provide support for CDFI TA and MDI credit unions. Monica?
Thanks, Terry. So everybody, you might recall from the previous webinar, we are making ourselves available at Inclusiv. We have a whole team of staff members who are here to help you if you are either certified or non-certified. This time around for the next month, we'll be helping particularly with the TA and FA grant applications. We're happy to share any templates that we have, or answer any questions, or even if we don't have the exact answer, we'll try to help you secure the answer. But feel free to reach out to me by email, and that's my direct number provided on the slide. I also wanted to just flag that during this time we're doing the T and FA for this month, but after May 3rd, we're actually going to continue work with you if you're a non-certified CDFI on the CDFI certification process. So those who may not have been able to submit just yet under the NCOA streamlined, there's still an opportunity to submit even before the fall. So we're happy to work with you on that as well. And for those who are non-certified and didn't get a financial workbook, as Terry mentioned, just email me, call me, and we'll make sure you get the RRP workbook equivalent for those that didn't get it before. So we just wanted to make sure that we will take direct questions and emails and calls and help you as much as we can through this next phase. And we're really, really proud of our members for completing that first portion with your SF424s and your RRP applications. You guys did a great job, and we're just here to help you to the finish line. Thank you. Turning it back to Terry.
Thanks, Monica. And the last thing, we always like to remind our members that obviously it goes without saying the official word on any kinds of questions related to applications is from the CDFI fund itself. They issue these frequently asked questions. All of you that have registered will be distributing the most recent copy. It is important to bear in mind that this document does get updated. So it's always a good practice. Those of you that, the 60% of you that have applied to either FA or TA in the past probably learned this, that it's a good practice to regularly check back at this site and see if there are any updates. And with that, I will pass it over to Pablo to introduce our guest of honor.
Thank you, Terry, and thank you, Monica. Clearly this is the year of CDFIs. So as you've heard over the last 3 months, 4 months, all we talk about is CDFI, the opportunities available to CDFIs in the country and specifically for credit unions. But these opportunities are only good as we participate in, right? So it's important that, and I'm glad actually that most of you on the call are in the process of applying for TA or FA this round. Not really the same as rapid response, clearly. We wish, that was the case, but maybe one day we'll see something like that. But we're really proud of our network, of each one of you on this call, because you all participate. When you participate, you are taking advantage of these opportunities. And that's what legislators intend, right? I mean, they want this money working for low-income communities. And the only way to make it work is by applying for this funding and then redeploying this funding in our communities. So thank you for that. And with that, I would like to introduce, of course, Amber Kuchar-Bell, our guest of honor today, a good friend, a great friend of Inclusiv and of CDFI credit unions. You all know her very well at this point, but she is a great champion for financial inclusion and community development. And again, the source of all things CDFI. So let's pay attention. Amber.
Well, thank you so much for such a kind introduction. I have to say that I really appreciate this partnership as well. We really have, at the CDFI Fund, really tried to make sure that this program is open to all CDFIs, regardless of institution type, and took this very seriously in 2017. We revamped our application completely, and the results have been are clear that it has been an easier process and more effective for CDFIs of all institution types to be successful in the application process. And so I really just want to highlight that maybe some of you aren't the first time applicants, but this is the first time in a long time applicants. And I want you to know that that this is hopefully a different experience for you. So with that, since most everybody we do have some first time FA and some first time TA, most everybody is like in the middle, in the beginning of their FA application. And so I'm not going to do my presentation because we have that on our website. What I'm going to do is I'm going to share my screen with you and present the CDFI Fund's website. And this is the FATA website. As you can see, you can kind of navigate up here, that you go to programs, trainings, programs, and roll down, and then you will get to this screen. We have a lot of information here. And what it's great is Inclusiv will help you break it down, or you can go to our website, or I can do this, but it has important information here at the top about deadlines, but it also has links to recorded webinars. So there is a presentation that you guys can scroll through and listen to anytime you want about TA and FA. So I will go there. If you guys want to see the full presentation, you don't have to listen to me ramble. But here's all the resources, the NOFAR, the Notice of Funding Availability, the program overview, and all of the guidance materials, which I'm sure you have all read by now. And then for technical assistance, it's just right below. But what I want to really direct you guys to, since most of you have done this before, and one thing that is new is that we're also interacting at the same time with the Rapid Response Program. And so we have found most of the questions are about that engagement and that interaction between the two. So where do we talk about that? The FAQs. Yup. So this is our FAQs that's really about considerations for the Rapid Response Program. It's all in yellow. So what I'm going to do is I'm just going to pop over to the Rapid Response FAQs, which are not, so I will not hurt your eyes, but they have the exact same information in them. So really go here, you'll see them in yellow, but if you do not want to see them in yellow, you can go to the Rapid Response page. They're exactly the same. I'm going to skip the first one because it's too late for that one. It's all the RRP information. But really, it's now your guys are asking, okay, so I did the RRP. RRP didn't require any projections. So got that off my plate. And now I have to figure out, what am I doing? Especially for financial assistance. And let me just break down a little bit on why this is important. Is if you're applying for technical assistance, there's only one program goal and measure. And when I mean program goal and measure, I mean that is when, after you get the money, what do you have to do with it? What are your responsibilities? Is for technical assistance, you literally just have to spend the money. And you can spend it on any of the categories that are eligible for technical assistance. So operations, toll type support, building your internal capacity. And so there are no lending requirements on top of that. But for financial assistance, it's a larger amount of money, and therefore there are more requirements. You have to spend the money within the period of performance, and there's an FAQ on that as well. So we can talk about what does it mean to expend. But Outside of that, you're also going to have a program goal and measure that is related to your base FA objectives. So we call them your FA objectives, and you have to do one of 7 specific FA objectives. And it's increased volume. It is of financial products or increased volume of financial services, a new financial product or service, a new geographic area. It's this like idea that you're doing something more. And all of those data points that go into your PG&M, all the lending requirements are based on your projections. So that is what I'd like to drive home, as your projections are going to be transferred directly into your PG&Ms. I do not make up your PG&Ms, you do. You are the ones that telling me these are what we're going to lend, and then we transfer that directly into your assistance agreement if you're successful. The other thing that I'd like to note before I even go further is there's a couple of really common misconceptions, is that if you project you're gonna do more, you're gonna score better, and that is false. Pause right there. The mere fact that you do more does not make it better projections. What makes a good projection is based in reality, based in history, defensible, and you can articulate why these are the projections you're making. And that is really important, is that you, by saying that you're going to grow 500%, you could actually really sabotage yourself if you don't tell me how that is based in reality, or how is that is realistic given your historic performance. I'm not saying that you can't score, that you shouldn't. I'm saying that you need to explain yourself. You need to have a through line for any number to say, we did this, this is why it's going to change, and this is what we're going to do going forward. Or this is our trend, and this is why it's going to continue. And really, you know, COVID is the elephant in the room, and we understand that. And you need to explain that your lending got shut down for a year on housing because new developers weren't developing, or you had commercial business in the pipeline, and that is not happening right now. It is all understandable as long as you give the explanation and context around it. So I will pause there and now talk about this FAQ. And really this FAQ is saying, what happens if we get both the RRP and FA award? Can we double count for reporting purposes? And the short answer is no. So what does that mean for your FA application? It means that when you're projecting out, you should assume that you get an RRP award. And you should assume you should not assume you're going to get a $5 million award. You should assume somewhere in the in what we've put out publicly. This, I'm not telling you anything secret, but publicly we have put out what the CDFI fund anticipates the RRP award sizes will be. So that is somewhere between $1 and $2 million. I'm putting that broad range, but the guidance material shows various scenarios based on demand data. And so what does that mean? It means if you think you are a smaller CDFI credit union and that the RRP is going to be basically all your lending in the next 2 years, because that PG&M requires 70% of equivalent lending into your eligible market or target market over a 2-year period, then you need to think about what you can actually do. And that may be that you apply for TA. I cannot tell you to apply for TA. But that also means that when you're looking at your PG&Ms, there's a place in the AMIS application that says, this is what your PG&M is going to be. Do you acknowledge that? Look really hard at that number and say, okay, that's my number plus my RRP. And here we have this really handy dandy little table that kind of shows a quasi waterfall that you might think of when you're taking your gross number of loans that you put into the TLR. and you say, okay, put all these numbers into the TLR, which is a transaction level report for anybody who has received an award before. If you get a financial assistance award, you have to report that information. And then you can see these are the lending benchmarks required to meet those particular PG&Ms, or program goals and measures. And so you have to add it all up. So if you if you had a requirement in your FA awards to close $1 million, and you had a requirement in your RRP to close $500,000 for your historic, FA award, and then you're going forward and you're like, oh, I'm going to need to close another $300,000 for my new award. You need to then, in aggregate, close $1.7 million in loans. So that's a little bit of how it works. And this is pretty technical, so I want you to make sure that you pause and you read this information. Terry, you want to build on that response?
Whoops. Am I? Oh, no, I am. I thought.
No, I can hear you.
I thought I was muted. So, yeah, I guess one of the things we often get asked is, how is that conflict between the two grant programs, particularly for credit unions that are not going to be getting a maximum grant. They're in that asset size, whereas you said in the example, the RRP grant could be, taking up a considerable amount of their lending, their projected lending in CDFI target markets. And that's where, it is worth having the discussion. Is a TA grant actually a better fit for your credit union? Because that won't come with these PG&Ms, and you will be of a size where, you would still be eligible to apply for TA instead of FA. It's an easier application. You don't have the performance goals, the lending performance goals and measures that come with FA. I would, I guess I'd also say that, or maybe this is as much a question for you, Amber, for credit unions where they still want to apply for FA, it is taking, their projected FA grant is still going to reduce the amount that they can project going forward, how they should explain that in their applications. I mean, it's an assumption you're making. If you say our projected lending, our financial projections take into account, an assumed $300,000 that we're expecting to get from RRP that will be, deployed in our target markets over the first 2 years of this projected period.
That's exactly right. It's simply saying, this is what we did to come up with these numbers. And you can also say in your narrative, for example, we anticipate lending $2 million over the next 3 years. We've reduced it by these projections by $1.3 million in this because of the RRP, and therefore our end projections are this spread over 3 years. It's a short and sweet sentence, and I completely understand where they came from. You walked me through it. And so that is important to note that that's the same guidance that we give for any supplemental award. So I think that's really important to underscore that the CDFI fund is tried to make RRP as simple as possible and in line with how we've treated other awards. So the base FA, that's the one where you could get the most amount of money, and that has the FA objectives associated with them. And then we have these supplemental awards, PPC FA, the Persistent Poverty County FA, we have Disability Funds FA, and we have HFFI FA. And each one of those, all of the guidance is very consistent. It says exclude those loans closed that will go to the supplemental applications from the base FA projections. Same thing here, just think of RRP as a supplemental award. And so you can have your top line number and then just subtract, and then help me understand that. So I think the other things that are helpful here is, again, I want you guys, I am not pushing you to apply for TA. I am just saying that I want you to be very cognizant there's options. Also, not every FA objective has a lending component. Some FA objectives are you're providing more development services. And some are saying you're going to serve a new targeted population. You do not get more or less points if you are going to do one FA objective or all FA objectives. What is important to us is that your business model is sound and that you help us understand your through line from what do you want to accomplish in your strategic objectives? What are the 3 to 5 things or one thing you want to accomplish in your strategic objectives, which is one of the first questions we ask, through your projections. How does the FA objective support those strategic objectives? I like to think of it as a pyramid. Like I have toddlers, so I think of blocks a lot. You have to build the base, and then you have to tell me the next level and the next level, and pretty soon it creates that picture. But if you're missing a part of it, then the picture, then the tower crumbles. And so when you're building your application, you need to make sure that every step is covered, so you take the reader along with you. And what's other really important information that I find really helpful when I do debriefings or when I'm communicating to anyone, and I'm going to digress slightly, Terry, because I think this is really important, but is if you go to the application evaluation process document, it's right here. The CDFI fund is more transparent than we've ever been in the past. And we tell you literally the exact questions that the external reviewers are going to be asked of your application in step 3. So it's a 5-step process for FA and in equivalent in TA. So I'm using FA because there's more, but you can go for TA as well. I literally take these questions and copy and paste them into my external reviewer guidance. Yes, they have a little bit more of like context and training around them, but these are the exact questions that we ask. And so, I like to think, I've heard people really like this suggestion, so I'm going to say it, is have somebody on your team that did not write the application. Give them these questions and have them read it, because they are going to be looking and saying, okay, did my organization, did their strategic goals, is it clear that their strategic goals supports the overall mission? Was that clear to an external person? Because when you write it, of course it's clear to you, you wrote it, but have somebody else read it. And for every one of these questions, this is what the external reviewers are going to do. And because they have one chance at this application, and they have to answer this question, because you could have written the most beautiful response and narrative in the world, but if it doesn't answer this question, it gets 0 points. Because that's what the federal government has to do when we're looking at grant applications. The last other thing I'm going to point you to is if once you get past step 3, we also do the same thing for step 4. These are the questions that my team is asking of your application to get your policy objective score. And at this point, I think I can stop talking. We can open it up to FAQs. I really want to make this an engagement, but look at these frequently asked questions around the interaction. They will really walk you through what you need to know. And if you have additional questions, please email the CDFI fund through the service request, and we have anticipated trying to get answers back within 24 hours. Terry.
Great. Jules, do we have any questions coming in, or should I kick off the Q&A?
That's a great question, Terry. I have not seen any questions come in so far. Would you like me to start with the first question around mid-sized credit unions?
Yeah, well, I think we did answer that question, but actually, Amber, if you wouldn't mind, if I asked a compliance related question, because we get this question a lot towards the end of application season, but because we had the first round of RRP, it seemed that as efficient as it was to do an RRP application, the compliance questions maybe disproportionately took a lot of attention. And we did get a lot of questions coming in, particularly about the question related to MRAs and DORs from credit unions, because the way the question is framed, credit unions have to click on the fact that they had an adverse opinion or DOR. And DORs are often very routine documents that come after, in the course of examinations. I had one credit union tell me once that their nickname for DORs was documents of examination, because their examiner felt, this was proof that they were really paying attention, and they would point out tiny little things, but it would be in a DOR. So there's some concern that, well, maybe we should just answer that no, because it's really nothing. Or if we do answer yes, that's some kind of black mark that's going to hurt our credit union. Wonder if you could just address that.
I think that's a really excellent question. And I want to say, to affirm, the CDFI funds and the CDFI program's intention is not to kick people out. Our intention is to ensure effective use of federal funds, and our intention is to support the CDFI industry. That's why I wake up every day. And so important to that is that, yes, if your examiner put it down as a DOR, then you need to answer yes. You have to answer the question. However, there is a place for you to explain it. And you can simply say it's because of signage. And if it's a non-material, then it's non-material. And a couple of things like what we do, and I think this is also listed in this base A application evaluation process around, sorry, I'm rolling quickly, but I just want to show you that, we communicate the step 2 financial analysis and compliance risk evaluation in here. So as you may or may not know, for your financial analysis, because everyone is a credit union, we get all of that information from NCUA or your regulator, if you're not insured by NCUA. And so we will get information from the regulators. And then with regard to the compliance information here in the compliance questions, if your organization, you need to have a 1 through 3 there, so that these questions are all risk rated and each answer has a risk associated with it. And then each question gets shoved into one big score, and that score is on a 1 to 5 ratio. And if you're a 1 to 3, then we never look at it again. You just move on to the next step, and all of that history is done. And it's back to 0. And then if you are a 4 or a 5, we have, I think 99% of our applicants go through this stage. So I think that should really take away the fear. I think, and we document that up here. Sorry, I'm just gonna show you that this is a handy dandy little chart that shows the percent of applicants going through on each one. As you can see, 99% of all applicants pass out of step 2, and that's the financial and the compliance scores. So really important to note that 99% go through. So you can be sure that the ticky-tacky, your signage isn't there, or anything that's reasonable is not going to kick you out. Otherwise, that number would be significantly higher. So that's evidence. You don't even have to take my word for it. It's written down. I think the other thing is that you really just need to, explain. And so every time there's a 4 or a 5, it also gets a desk review. So if, for example, the reason why you got kicked up into the 4 was because of that, then there's a human saying, "Oh, that's ridiculous," and it will be moved on, because the machine is only as good as a machine. So we definitely have this false negatives that we make sure that go through. So I see some hands raised, and I can pause there. The other thing that I should just mention, though, is outside of the step 2, we do look at things in the policy, in the due diligence review, and that's another place that you should really just explain what's going on. And we give a written narrative area for anything that you think bears explaining, that you have something to share.
Great.
In the written place that we tell you to share.
Thank you, Amber. We do have a bunch of questions that have come in. A few are relatively straightforward, a few less so. First, Jolene asks, I've been told that the maximum request amount is $1 million, even if the applicant could request more without hitting the $5 million cap. Where is this limit articulated? This limit is articulated, Jolene, in the notice of fund availability. That's the first attachment on the CDFI funds application or page, the grant application page. The NOFA, the notice of fund availability, and thank you, Amber, for circling the area, is basically that lays out the rules of play for this grant round, and includes eligible uses of funds and the maximum grant award amount as part of this CDFI funding round, and for this specific set of programs. Related to that, again, eligible uses of funds are detailed in the notice of funding availability, but there are questions. Can financial assistance dollars be used for allowance for loan losses? The answer is yes, they may. Can financial assistance dollars be used as customer or member incentives towards their monthly payments?
No.
Yeah, that's a question. I didn't know off the top of my head, but no, that's not possible. We're looking for deeper and greater lending into CDFI target markets for the use of these funds. For the financial.
I think a really important chart and showing that can help you with this is table 3. So these are all the eligible activities for financial assistance. There's a separate table below that talks about eligible uses for technical assistance, but really any financial product, any lending product you make, that's an eligible activity. Helping, pay your tellers, for example, because that's providing checking, savings, cash checking, that's a financial service. Loan loss reserves, development services. So anything that you do to help prepare your applicants or your borrowers or your customers to apply and receive capital, that counts as development service. And then for credit unions and regulated entities, capital reserves, you can plunk that on your balance sheet. And as soon as you say that I am allocating this money to my capital reserves because, for whatever reason you need, your regulators say that you need more capital reserves because you are lending to a higher, your percentage of low FICO scores is higher than they like, then you can just use this award funds for that, and then you can consider it expended.
Thank you. Another question, is it necessary to submit a detailed budget of how the technical assistance funds will be spent as, in the application?
No, it is not it. We do ask you how you're going to use the funds for technical assistance, and here you can see here the eligible activities for the technical assistance in table 4, but you do not have a line-by-line budget. You just say how much you would like, and then in the end, after you use them towards one of these eligible expenses, there's a report called the Uses of Award report, and you simply tell us where you used the funds.
Thank you. So this is actually, we said we weren't answering questions about RRP. This is a relatively quick one, so I'm going to let it slip through. There was a concern about negative income. You're only supposed, for the RRP application, you're only supposed to enter a 0 if you have negative income. We're nonprofit organizations. Sometimes we have losses, but there's not an area to explain that. Can you just clarify to credit unions attending this call?
Yes. So in the CDFI FA application, there is an entire question that you can, 3,000 plus characters that you can go and explain. In the RRP application, there was no narrative questions. And we put out publicly that if the CDFI fund is going to reject an application or for the financial scores or anything that's mismatched with their information, like negative numbers and zeros and financial risk, we will reach out to you and ask for an explanation before anything. So rest assured, if you don't hear from the CDFI fund, and that is not going to be an issue. If you hear from us, please respond.
Thank you.
In a timely manner.
That is all the questions that I've seen come through.
Yeah.
Yeah.
I've got one more that's kind of related to what we were talking about earlier in terms of the interaction of the RRP and FA grants. And this is particularly for smaller institutions that would be getting considerably less than the maximum grant amount. And it's a concern about, whether, for example, if you got a grant that was just over the $200,000 minimum grant, and you're planning to spend most of that for TA, that $200,000 that you could use for TA, whether the lending PG&M would be based on 70% of the entire RRP amount, or just the amount over the $200,000. Obviously, this then would connect to a question about financial projections if you are applying for FA, or whether or not they should consider applying for just a TA grant if they have that concern.
Yeah, it's a good question. No, the RRP is pretty clear that you're anything over 200,000, you are going to be required to lend 70% of your total award size in financial products. It can be any balance sheet information, like funds. So you have, the money from your deposits that you are going to close loans, those loans count towards that. It doesn't have to be directly the CDFI RRP funds. However, that is, anything over 200,000 is going to have the full second PG&M. Another thing that I'd like to know is that, clearly you guys are working with imperfect information. And that once you get, you will first, most likely, get your CDFI RRP assistance agreement. And then, much later, possibly, you will get your CDFI your CDFI FA or TA assistance agreement. Every single person has the right to request a modification. We do not want you to sign an assistance agreement knowing that you are not going to meet the PG&Ms. Yes, we have to evaluate it. But the reason why we do this is because I do not set your PG&Ms. You do. So if you then tell me you need to change them, then you change them. That's another reason why you don't get more points for higher PG&Ms or higher lending goals, because then I would be unfairly treating somebody who did something realistic. If somebody got an award because they got really high PG&Ms, then I would lower them down and be like cheating the system. That's another reason why I promise you, just tell me what you really think you're gonna do and tell me why. Really important.
Thank you, Amber. We have one question that came in, and I'm going to ask it, but it's about reporting for TA. So Zara, if we're not able to answer your question, I think we may need to handle this one-on-one. However, Zara asks, we're going to be coming up on the reporting for 2020 technical assistance. Can you speak a little on the reporting? If I recall, there is an audit required. Will we use our examiner's audit?
So I'm not exactly sure that specific question, because I think you need to go to your assistance agreement and look at what the assistance agreement says. Specifically, off the top of my head, I'd like to say that you're only required to have a A132 audit, A133 audit. If you expend more than $750,000 in one period of in one fiscal year, and that means expend it like you allocated it. But if you did, if your full award was $750,000 and you expended, $50,000 in your first period of performance or fiscal year, and the rest in the second, then you never tripped that threshold, and we were your only federal funds. So this is a pretty technical question, because I'm not exactly sure which audit you're talking about and which requirements. So the most important things that I would direct you to your assistance agreement. Another thing that anybody can do is, you can see here, it's like where you are in the process. So you can see, like in the award announcements and closing and disbursements, if you go here, you can see the templates. So if you can't find your assistance agreement, it's in AMIS, it's an attachment there. Then you can find it. You can also go to this this template, and it will have the basic terms and conditions.
Thank you. Yes, a reminder that for most TA awardees, your award may not exceed the limit that would trigger an A133 audit. Also a reminder, as regulated institutions, as part of the application side, you do not need to submit audited financials because we're regulated institutions. Hopefully that answered the question more or less, but again, if you have follow-up questions, you can reach out to Terry or myself, and we'll try to get you an answer, or of course to Monica, or why not Pablo. Any other questions before we wrap up for the day? Well, again, I just want to thank everybody. Thank you so much, Amber, for your time and your insights. I always learn something that I didn't know previously after one of these conversations. So I think that says more about me than it does about you, but and thank you, of course, to Terry, to Monica, and to Pablo, and to all of you for taking advantage of these resources and for asking such interesting and insightful questions. Good luck, everybody.
Thank
Talk
you
to you
so
soon.
much.
Thanks,
Thank you.
everybody.
Thank you.
Bye.
Bye.